According to the Federal Reserve, more than 40% of Americans couldn't cover a $400 emergency without going into debt. Let's get real. Have you ever been up at 3 a.m., your mind spinning with terrifying what-ifs? Not about skipping dinner out. I'm talking about the real disasters. Losing your job, an ER bill that wipes your savings, or a lawsuit that could take everything. The real financial pain isn't about a $5 latte. It's about the anxiety of knowing you're one shock away from losing years of hard work. Think about it. We obsess over pennies, but ignore the $50,000 bombshells that actually destroy net worth. In the next 20 minutes, I'll show you the 5-step system that wealthy families use to bulletproof their finances, shield their sanity, and turn anxiety into unstoppable confidence, without giving up the things that make life good. And unlike cutting coffee, this can save you hundreds of thousands of dollars. Ready to build real defense? Let's get started. First, let's address the trap nearly everyone falls into when they try to get their financial lives together. It's what I call the $5 anxiety trap, a mindset the majority of Americans have, and it's backed up by data from behavioral finance studies. If you're like most people, you've done this. You track every minor purchase, debate endlessly about a cup of coffee, load budgeting apps, and cut coupon after coupon. On paper, that kind of vigilance seems responsible. But let's be honest. How much time each week do you spend worrying about $5 or $10 expenses instead of thinking about real threats? Think of it this way. Would you spend hours patching a pinhole leak in your boat with chewing gum if there was a 3-foot crack in the hull that you never noticed? That's exactly what happens when you focus on minor daily costs but ignore catastrophic risks. The ones that, according to the National Endowment for Financial Education, are why nearly 60% of Americans have experienced a major, unexpected expense in the last year. Let me break this down with a real story. Marcus, 38 years old, prided himself on being frugal. He skipped Starbucks, cut cable, and watched every bill. But when a tree crashed through his roof, the $25,000 repair bill caught him with his guard down. His budget insurance policy, untouched for years, covered just $12,500. That left Marcus with a $12,500 loan, instantly undoing years of frugal living. The daily savings? Gone in an instant. The real damage came from ignoring the big risks, not from enjoying the small luxuries. Here's the key lesson. The $5 decisions are not what will bankrupt you. It's exposure to the $50,000 threats that will wipe you out. Real wealth builders ask, how do I protect what I have before I focus on the nickels and dimes? If this perspective shift already has you rethinking your budget, type guilty in the chat right now. Let's see how many of us have focused on the wrong battles. That's why today's playbook is all about strategic insurance. Not the boring, overpriced policies you see in commercials. We're talking high leverage protections. Ones so powerful that with a modest investment each month, you put a steel wall between your savings and total financial ruin. Let's anchor this with an expert insight. According to the Insurance Information Institute, even a basic suite of protections, an emergency fund, life and disability coverage, and a limited umbrella can prevent more bankruptcies than any single budgeting tactic. The goal isn't just to save money, but to safeguard your energy and focus. When your biggest risks are covered, you reclaim your mental bandwidth. Suddenly, the little daily anxieties disappear, freeing up space to actually grow your wealth. Ready to see how this works? Let's break down the 5 real money defenses step by step. Number 1. This is where most people underestimate their own power. The emergency fund. I know, it sounds basic, but hear me out. A Federal Reserve survey found that 37% of Americans would struggle to cover a $400 surprise expense. So, before any insurance company gets a dime, your first defense is a self-built shield. Emergency Fund 101. Think of it as insurance number 1. 0 premiums, 0 paperwork, and the highest return on investment you'll ever get. The value is simple. When life goes sideways, a transmission blows, you're out of work for a month, or your landlord suddenly raises rent, your emergency fund means you don't panic, you don't rack up 20% credit card debt, and you don't get locked into sacrificing years of compounding returns just to bail yourself out. Let's run the numbers. Suppose your car eats up $2,500 in repairs. No fund? You borrow on a credit card at 20% APR. That's $500 in interest if you take a year to pay it off. That's money down the drain. And most importantly, months where your stress levels skyrocket and your options shrink. But if you have that fund, money set aside in a high-yield savings account, you pay with cash, avoid the debt spiral, and immediately save what's basically a 20% tax-free return compared to the interest you would have owed. That's better than most stock market investments, and because no one can charge you interest on money you already have, it's as close to a guaranteed win as exists in personal finance. Remember, for education only, not financial advice. Your results can vary. Always talk to a licensed advisor for your specific situation. So, how big should this fund be? Forget one-size-fits-all slogans. Calculate precisely. What does it take to keep your household afloat for 3 to 6 months if everything went wrong? Add up essential expenses only. Rent or mortgage, basic food, utilities, and minimum debt payments. Entertainment and extras don't count. For most people, this is $5,000 to $15,000. Adjust based on your situation. But most people never do it because they believe they should start investing right away. I'm here to say, the data shows the opposite. Financial planners rank emergency funds as the first line of defense for a reason. Trying to build wealth on a shaky foundation is just setting yourself up for disasters like panic job changes, bad housing choices, or desperation purchases. The emergency fund gives you the time and space to decide from a place of strength, not crisis. Let me show you what this meant for Denise, age 27. She finally moved into her own apartment, barely making rent most months. Then, in the dead of winter, her heater died. The repair cost? $1,200. Old Denise would have swiped her credit card, watching debt snowball. But this time, she'd built a $5,000 emergency fund following this very plan. She paid it instantly. No debt, no stress, and she stayed laser-focused at work. She later told me it was the first time in her life she felt genuinely free. Not because she earned more, but because a small crisis didn't spiral into years of setbacks. That's what real financial confidence feels like. Quick recap so far. You're building the first wall of defense, your emergency fund. If you want help with the numbers, I have a free emergency fund calculator linked in the video description. It's fast, simple, and dialed in for exactly this scenario. Grab it after this section. Now, on to your next, and possibly most high-leverage, defense. Insurance number 2. Term life insurance.
If anybody in your life relies on your income, partner, children, aging parents, this is non-negotiable. Let's ground this with new research. Per LIMRA, a major financial research firm, more than 40% of households would experience financial hardship within months if the primary breadwinner passed away. So why do so many people either ignore life insurance or buy the wrong kind? The biggest trap is whole life insurance, pitched as an investment, but almost always a bad deal for most families. Whole life policies cost significantly more, deliver poor returns, and often come bundled with massive sales commissions. Sure, there are exceptions, and it might fit in rare cases, but for 90% of us, term life is the move. Remember, this is general education, not personal advice. Always consult a licensed advisor before making insurance decisions. Term life is straightforward. You pick a coverage amount, usually $500,000 to $1 million for 2 decades. Pay a modest premium, often $30 to $50 per month if you're healthy and in your 30s, and your family gets a massive payout if the unthinkable occurs. No investing, no gimmicks, just pure protection during the years you actually need it. Want specifics? For a healthy 33-year-old, a $500 20-year policy can cost as little as $25 to $35 a month. That's almost nothing compared to the risk it covers. Paying off mortgages, college tuition, daily expenses. The math is simple, and the leverage is massive. Spend less than $1 a day for hundreds of thousands in peace of mind. Let me pause for a second. Have you ever faced an insurance surprise? Or been hit by a bill you never saw coming? Your story in the comments could help someone else make a better decision today. Leave it below and help build our community's financial wisdom. This isn't just theory. This is lived reality. Sarah, age 42, and her husband put off insurance for years, thinking tragedy could never happen. When her husband unexpectedly passed away, the $400,000 term policy he'd finally purchased the previous year saved their home and covered 2 years of living expenses. Sarah had room to grieve and regroup. The cost for years of that protection? $35 a month. Less than some people spend on streaming or their phone bill. If that doesn't show the impact of smart, cheap coverage, nothing will. Let's lock in a plain language takeaway. Term life insurance is a low-cost policy that protects your family's lifestyle if you die, but doesn't double as an investment. Shop carefully. Avoid whole life unless your advisor has a clear, specific reason. And always compare quotes across top-rated providers. Defense number 3 is the one most people overlook. The umbrella policy. This is where smart planners create a moat around everything they've worked for. To anchor this, according to the Insurance Information Institute, personal failure claims, think auto accidents or home injuries, are among the top 5 causes of bankruptcy among middle-class families. Look at your current auto or homeowner's policy. The coverage often maxes out at $250,000 or $300,000. If you cause a major accident, a dog bite, or someone is hurt on your property and sues, the standard policy pays up to its limit. The rest, that risk comes straight for your house, savings, and investments. An umbrella policy rides on top of your base insurance and provides an extra $1 million or $2 million in liability protection. Here's the part most people miss. It's shockingly affordable. Most $1 million umbrella policies cost just $15 to $25 per month. For the price of one pizza delivery or a streaming service, you can protect literally
everything you've built. Think about how illogical it is to pay for extra channels or gym memberships you never use, but skip the policy that defends your wealth from a single accident. A quick glossary pop-up for the beginners. An umbrella policy is supplemental insurance, not a replacement. It pays out only if your other liability policies are maxed. Double-check all exclusions and always ensure it covers your biggest risks. Here's what I want you to remember. One lawsuit, even if it's frivolous, can wipe out decades of savings. For less than $300 a year, you buy peace of mind that's worth hundreds of thousands, sometimes millions of dollars. And because lawsuits are unpredictable, you can't afford to skip this line of defense. Real wealth isn't just about having money. It's about making sure it can't be easily taken away by others. Ready for Defense 4? Now we're talking about protecting your physical self and your future wealth. Enter the High Deductible Health Plan, HDHP plus Health Savings Account, HSA Combo. According to the IRS, in 2024, the HSA annual contribution limits are $4,150 for individuals and $8,300 for families. If your employer offers this option, listen up. This is the only triple tax advantaged account in America today. Let's break that down. Money goes into your HSA tax-free, grows tax-free when invested, and comes out tax-free if used for qualified health expenses. That means you're using pre-tax dollars, compounding tax-free, and withdrawing without penalty if you use it for medical bills. A retirement superpower. Unlike flexible spending accounts, FSAs, your HSA balance rolls over year after year. It's never use it or lose it. Many people automatically choose the lowest deductible health plan because it feels safer, but a high deductible plan can often save hundreds a month in premiums, savings you funnel into your HSA. If you're young and healthy and can cover that higher deductible from your emergency fund, this combo can add up to tens of thousands in future wealth, tax-free. And yes, always review policy exclusions and coverage details. Plans and rates vary. Not every HSA or HDHP provider is the same. Here's a plain summary. An HSA is the best retirement account no one talks about. Fund it with pre-tax dollars. Invest that money for long-term growth and pay for medical bills with tax-free withdrawals. If you don't touch it, after age 65, it functions like a traditional IRA for non-medical expenses, but with more flexibility. Don't leave this money on the table. Before we dive into Defense 5, a quick compliance timeout. Remember, this video is general education, not financial advice, and past performance doesn't guarantee future results. Always consult a licensed financial advisor or insurance professional for custom recommendations based on your specific needs and state regulations. You'll see this reminder on screen, and I want you to take it seriously. Now, on to the most overlooked, but arguably most valuable defense: disability insurance. Here's a stat from the Council for Disability Awareness. Nearly 1 in 4 of today's 20-year-olds will become disabled before reaching retirement age. Yet most people insure their cars and homes, assets that go down in value, but forget to insure the one thing that creates wealth: their ability to earn an income. Picture this. You're earning $80,000 a year, building your investments, paying your mortgage, and then a serious injury cuts off your pay for 6 months. or years. If your coverage is weak or absent, your entire financial plan collapses overnight. Most employer disability plans only cover a fraction of your pay and may exclude high-risk professions or pre-existing conditions. Plus, the details, like whether your policy covers own occupation, protects you if you can't do your actual job, or any occupation you must be completely unable to work, matter a lot. This isn't cheap. Sometimes $100 or $200 a month. But it is the ultimate backup plan for everything you've worked for. To put it plain, without disability insurance, you risk losing everything if you can't work. With it, your wealth-building engine is protected, and you have real freedom to recover, retrain, or pivot as life demands. If you want a simple checklist to make sure you're not missing one of these critical protections, grab my free insurance coverage guide from the video description. It's totally free and takes 2 minutes to scan for holes in your financial wall. Let's pause and recap the 5 walls you need to build around your finances. 1. Emergency fund, your zero-cost shield. Avoid 20% plus interest debt and the stress of big surprises. 2. Term life insurance. Affordable, high-impact protection for those you love. 3. Umbrella policy. An extra $1 million for $15 to $25 a month, defending against rare but devastating lawsuits. 4. High deductible health plan plus HSA. The best-kept secret for tax-free growth and health expense management. 5. Disability insurance. Insuring your most valuable asset, your ability to earn a paycheck. Together, these create the ultimate wealth defense system. The point isn't to obsess over every coffee shop visit or live in fear. It's to focus your attention on the risks that can actually break you, so you never have to rebuild after disaster. With these defenses in place, everything else becomes easier. You invest with confidence, sleep better at night, and gain the freedom to take calculated risks that open doors instead of living paycheck to paycheck in survival mode. If you made it this far, screenshot this summary and share it with someone you care about. Most people don't build these walls until it's too late. Let's change that for your entire circle. And if you want more resources, don't miss the free calculator and insurance checklist linked below. Use them as soon as you finish this video. Not tomorrow, not next week. Let's quickly recap what you've just learned. True financial security means building strong defenses first, not just slashing small expenses, but shielding yourself from the big shocks that can wreck your future. We covered the 5 most powerful steps: a fully funded emergency fund, term life insurance, an umbrella liability policy, a high-deductible health plan with HSA, and disability insurance to protect your income. Here's how to take action today, this week, and beyond. 1. Today, open a high-yield savings account. Calculate your minimal living expenses for 3 to 6 months using the free emergency fund calculator below. Start your auto transfer. That's your first wall of defense. 2. Within a week, get life insurance quotes for term coverage at least $500,000. Compare multiple providers. The broadsheet insurance checklist below will help you identify gaps. Use it to review umbrella and disability needs as well. 3. Within 30 to 90 days, meet with HR or an independent insurance professional to confirm your employer disability plan covers at least 60% of your income and offers own occupation coverage. Review health plan, open enrollment for HDHP plus HSA options, and ensure you're getting employer matching
if available. 4. Ongoing 6 to 12 months. Track your walls in a simple spreadsheet or use our checklist to revisit each area as your life or career changes.
Automate transfers and premium payments to avoid lapses. Reshop for better rates or terms as your situation improves. Remember, most people see less anxiety within weeks of setting up their emergency fund, even before it's fully funded. Major coverage can usually be in place within 30 to 60 days if you start now. The sense of freedom from not living on the financial edge, that's a lifetime upgrade. If you want a free emergency fund calculator or insurance checklist, check the link in the description. It's totally free and designed to get you protected faster. Share these tools with someone you care about. Don't let them wait for disaster. To learn, if you want more step-by-step, myth-busting strategies to build real wealth safely, subscribe and join our community here at Jim Invests. Your financial future is too important to leave to chance.
Drop your toughest personal finance question in the comments. I'll answer the top ones in next week's video.
And the last word.
This video is for education only, not personal financial advice. Markets change. Personal needs vary, and past performance doesn't guarantee future returns.
Always consult a licensed advisor for recommendations tailored to your life. I'm Jim from Jim Invests. Go build those walls, and I'll see you next time.